Good afternoon, everyone. I am Earl Butch Graves, Jr., the CEO of Black Enterprise. It's my pleasure to welcome you to our inaugural Future of Financial Services Summit, FinTech, Cryptocurrency, and Black Wealth. Thank you to our sponsor, Prudential, for partnering with us to present today's virtual conference, in addition to hosting our in-person networking event in New York City, where 2 of today's sessions were recorded. Building multi-generational wealth for African Americans has always been at the foundation of the Black Enterprise mission. Today, we are serving that mission by focusing on the way the financial services industry is being completely transformed by fintech, decentralized banking, blockchain, and the emergence of digital assets, including cryptocurrency and NFTs. We know that Black people are excited about the potential of cryptocurrency, NFTs, and blockchain to open up new avenues of Black wealth creation. According to the most recent Ariel Schwab Black Investor Survey, of the 6 financial products, bank savings accounts, individual stocks, stock mutual funds, cryptocurrency, individual bonds, and bond mutual funds, cryptocurrency is the only one owned by a higher proportion of Black people than of white people. About 38% of Black investors under 40 years old own digital tokens, compared with 29% for their white counterparts. Overall, twice as many Black respondents than those who are white rank crypto as the best investment choice overall. It is critical that we discuss and understand what this means for Black people and communities in terms of both opportunities and obstacles to close America's racial wealth gap. To that end, we've brought together top experts in financial services, fintech careers, crypto, and blockchain to explore these issues, all of whom are passionate about the importance of Black people being positioned to prosper in the age of fintech and crypto. As with all Black Enterprise events, today's Future of Financial Services Summit is about solutions that will move us forward, enriching and empowering our families and communities. Now, without further ado, let's get started with our first session.
Good evening, everyone. I'm Justin Barton, Senior Vice President of Digital Strategy and Partnerships at Black Enterprise, the nation's #1 Black digital media brand with more than 12 million monthly unique visitors. Building multi-generational wealth for Black people has always been at the foundation of Black Enterprise's mission. Today, we are serving that mission by focusing on the way the financial services industry is being completely transformed by fintech, decentralized banking, blockchain, and the emergence of digital assets, including cryptocurrency and NFTs. It is critical that we discuss and understand what this means for Black people and communities in terms of both obstacles and opportunities to close the racial wealth gap. To that end, we brought together top experts in the field of financial services, crypto, and blockchain to explore these issues. Now, without further ado, let's get started with our first session. I'd like to introduce you to Larry Wade, who is the Senior Director of Global Risk and Compliance, Blockchain at PayPal, and Imari Oliver, Founder and CEO of Bond in Play. I think this conversation would go great if we talked about the practical application of blockchain. I know a lot of people, when you think of the blockchain, a lot of people focus on cryptocurrency, stable coins, all that, but there's so much more involved in it. So for a primer for the novices, like I'm a semi-novice in this, can either one of you explain what the blockchain is?
Blockchain is just a decentralized immutable ledger. All right, that sounds kind of wild, but really think about it. The way I like to give this example, let's say when unfortunately Haiti had that hurricane, and you had land records that were still on paper. To this day, people are still fighting, saying, I own that, because there's no provenance, there's no way to determine. When land records are all on a blockchain, every node in that network has a full copy. So if that particular node goes down, we still know. The way I like to say it is eventually anything that is in the if-then is going to be in some type of smart contract on a blockchain. You're going to have multiple blockchains that are private, semi-private, public, interoperating with each other, bringing liquidity, bringing transparency, things like triple entry accounting, where rather than an army of auditors, for example, you'll be able to kind of press a button, have your consolidated financials, and then communicate that right with the auditor. And we're going to enter that type of world. So a blockchain is really just a way for us to have that type of transparency. There's the cryptography that allows us to have trustless transactions in the digital world.
And I would just add to that is, I think I look at industries and I look at how industries are evolving and changing and primed for change. And when you think about education and how your records can now live on a blockchain. So, like I've been out of college for a while now, and I don't have to call the bursar or the registrar or whatever, and I'm trying to find records, and they're like, well, I probably don't exist in the system anymore or whatever, or, I got to pay some fees or find out I still owe some money or some student loans that slipped my mind or whatever. But now when it's living on a blockchain and it's all transparent and people have access, then you start talking about other things like your wallet and all these other things. But anyone can have access to the files or the records and then you control. And I think that's another piece of it, and we definitely have to talk a little bit more about data sovereignty and IDs and digital passports and all these other things that people start saying, talk to me like a 5-year-old, because then we start going into a whole nother world. But I think it's important to really understand some of the basics, but more importantly, just understand how to start playing with it. Like, you don't have to build your own blockchain. You don't even have to know what half of these things are that we're going to be talking about. The point of the matter is to understand that it's going to change your lives in a lot of different ways, and it's going to create new experiences. So the idea is, how do we start becoming more curious about what these things are?
Yeah, and definitely. And this is a conference about financial services, the future of financial services. So a lot of times we hear about DeFi, decentralized finance. Larry, can you explain what that is to everybody, at least to get that primer, and then we'll get deep into other things?
Yeah. Well, first, a lot of the unfortunate blowups you've seen were actually CeFi. So they were like centralized finance, right? So pretty much, they took digital assets and utilized the same inappropriate procedures that have kind of led to situations like long-term capital management and things of that nature, over leverage, et cetera. DeFi is where now the actual governance is built into the protocol, and smart contracts rather than human beings are executing per the particular requirements. So if you and I, for example, are in some type of DeFi protocol where, let's say, it's peer-to-peer lending. The smart contract would allow me to have my coupon payment paid to me instantly to my wallet, right? Rather than a human having to do that. So it just it's going to allow us to have a more transparent, financial system. Obviously, there'll still be CeFi and there'll still be human beings. We don't want to throw us out, but it'll just allow us to be able to expand the pie in a more trust-based way, and obviously more transparent.
And I would add, what I'm fascinated about is, you live in this new world where through a smart contract, everything is already written and it's in this, this format or this program that's executed when certain things happen. So for example, if, let's say, we own an NFT and we share it and someone buys it, automatically, I don't have to look for him for my check. I don't have to look for him for my check. The smart contract says this deal was executed. He gets 50%. He gets 25%. He gets 25%, and it's done. You don't have it change. And Nas did something with his whole, shared ownership or fractional ownership or however with the music, where when you were able to buy a token and that gave you the rights to certain royalties from their Spotify streaming service. And so think about that. Now, imagine if you told Nas, all right, I got to go and sit down on an Excel spreadsheet or something, and I got to figure out, well, he gets 5 cents and he gets 2 cents and she gets 3 cents or whatever. Smart contract takes care of all of that. It's like once the deal is executed, it already knows what to do. It's like set it and forget it, right? Now, the problem is if you don't know how to write a smart contract or you write it wrong, because you can't change it, because like you said, it's immutable, and once you do it, that's it, and things go wrong.
You said a couple things I need to touch on. So first, one, you mentioned, there's a smart contract where we can have basically a syndicated party, and our, whatever the output is that is due to us comes instantly. That's going to allow for, micro payments and fractional ownership, right? Where you could own 1/1000th of a brownstone, right? That's kind of exciting when you think about it. Then you also mentioned some other things that made me think about the cost of transactions. One of the problems is that the internet democratized information. We have not democratized value yet. It is too expensive and cumbersome to transfer value. I can send an email to the UK instantly. Can't send any money. Ever try to send a wire, right? So when you start to think of us being able to work and again, have that coupon payment, it's cheap, it's transparent, it comes when it's supposed to. We're starting to now expand the pie in a way that we haven't really thought about. So, I want to just kind of highlight that.
Right, and I didn't even think about that, like fractional ownership of brownstones. Like you could, it's funny, when I have crypto sometimes, and at the end of the year, they'll tell me because you staked your coin or whatever, and I'll just find some money, and I'm like, where did I get this from, right?
And you're talking about staking, right? So think about this. Sorry, I get excited when this starts happening. You got me going. So in the internet, the current iteration, whoever created the protocol or was a part of the network effect associated with that protocol extracted no value. Who got rich off of TCP/IP, right? Mm-hmm. What blockchain and digital assets aligned to blockchains allow for is for you to participate at the protocol layer. So whatever is built on top of it, the Facebooks and the Googles, et cetera, the decentralized applications, as the value of that protocol increases, you being a participant early on, you can now rise with that. That's another unique concept that we haven't been able to see in the current way, financial services and just value sharing is actually prevalent.
Yeah, and I think that's a big key, value sharing, because now you're in a world where everyone can win. Before it was always this, the big guys, they take it all, and the little guy, they always say, gets stomped on. But this one, it's like, if JP Morgan purchases a coin, they're going to purchase at the same price I purchased it at. They're not going to get any discounts. Like, for me, for them.
It goes back to the internet, right? Mm-hmm. So, there was a time where you couldn't Google and figure out which test prep company should I use to study for the SAT. Right? If you didn't have that information, you were kind of like out of luck, right? So what the internet did is it kind of lowered that information asymmetry. That's what you're mentioning here as well. Now, with that said, we're still early, extremely early. And the denominator in this market is so small. And, you mentioned, a smart contract being locked, for example. We flick the light switch and the light comes on, right? You don't sit up there and think like, oh, I need to understand how circuits work. Eventually, we're going to have that type of light switch. I mean, it's too complicated right now. But from my viewpoint, one, the volatility is a feature, and two, that friction is a feature. Because if you do your homework and you learn and you figure out where's the utility and where are the opportunities, you almost think about yourself as a venture capitalist, for lack of better words, right? It's an opportunity for you to extract value early. Everybody says, oh, Amazon, that makes sense to own Amazon stock. There was a time where everybody thought Jeff Bezos was an idiot for just reinvesting in the company, or there's an 80 vol on the stock, or it's a complete, so we're in that moment now where, yes, you got to do a little work. Yeah, you might have to, have something in some type of hardware wallet and store your private key and all the good stuff, but that's actually a positive because you're early, and as things continue to evolve, you'll be able to grow with it. Because all of this is Metcalfe, all of this is network effect. That's why Google and these companies are worth so much money.
And I don't know if you have other questions.
Keep going.
Sorry.
I'm learning a lot. Keep going.
Because, I always believe that the winners and losers are going to it's going to be a shakeout like 14 to 18 months, right? Because I see I attend a lot of conferences, and I'm at a lot of different events with a lot of different blockchain companies, hardware companies, and what they're building. And, as you look at, there's this whole conversation, the market is crashing and we're in a recession. I don't know what they're talking about, because all I see is money, 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 money moving from point A to point B. And, I look, sometimes I go on Etherscan and some of the other chains. I just want to see what's happening, like who's moving what and where. And you see these big institutional buys. And the reason I know they're institutional, because I know we're not spending that type and buying those types of coins and things like that. So, and that transparency with blockchain allows you to just pay. Even if you're just curious to say, I want to see what people are just doing today, like who's buying what. You may not know who it is, but you can start figuring out who's the big players in this space, and moving things around. So there's a, I always say the curiosity will not kill the cat. I think it's a good thing to be curious. I think we have to be more curious, because that curiosity, when I first got into even cryptocurrency and started learning about this thing, I was like, I don't want to get into it. I don't want to know about it.
I thought it was tulips.
Yeah, I'm kicking myself now when people first told me about Bitcoin, and I was like, I don't know what that thing is. And now I'm like, ugh. And you try not to go back when Bitcoin was like 4 Bitcoin for a penny or whatever. I try not to look back on that and just like I was stuck on.
Yeah, I was telling the story before. Matt Mitchell, who's here, who's one of our moderators for our virtual panel, years ago, maybe 5, 6, 7 years ago, he gave me a fractional Bitcoin, and it was in a cold storage wallet. And then I left the key on the table. It got thrown out, and now the money's disappeared. But that brings me to another topic, which is a funny story because it's probably worth a lot right now. But you're talking about decentralized finance. I mean, no government is involved really in the process currently. But we know that there's a discussion right now whether, well, first of all, you look at the asset class, which is crypto, right? And we're looking at like a $3 trillion asset class. It's going down to $1 trillion during this crypto winter, right? So there is a little retraction we see right there. And then you look at it, where's the regulation of this? Where's the regulation going? Is it a commodity? Right. Is it a security? So, who's going to regulate it? And that's some of the things that make it easier, especially for black people who are worried about putting their money into this type of algorithmic situation. They're saying, what happens if something goes wrong? And we can talk about that a little later, but what is this, what's happening there?
This is not financial advice, and this is not PayPal, this is Larry. So I'm just going to say that, right? First, to answer to address what you said around the market crashing, what asset class is going up right now? Mm-hmm. Let's just be honest. We're in an extreme macro, situation that we really haven't seen. This is 70s, 40s type stuff. Now, with that said, don't you always want to acquire assets when they're undervalued, and then you have your margin of safety, and as long as you're not speculating and you can have duration on your side, kind of can work out, right? Have a couple winners up. So I don't look at when stocks go down. That's not a bad thing to me, right? But that's here nor there. Now, regulation, obviously, that's I'm fortunate enough that I get to talk to all the regulators around the world, different governments, et cetera. Number one, financial institutions that are in this space, for the most part, they're responsible. We want regulation, right? We want thoughtful regulation. We want to be able to understand what are the rules of the road. I think that's coming, right? You had the president's executive order, right, where basically he mandated a number of groups to say, hey, you need to come up with your digital asset strategy and how are you going to work together. Currently, unfortunately, we are, in certain cases, trying to fit something that is new into existing parameters, and it's a bit of a challenge. Right. That's where that security thing comes from, right? Howie was about oranges, digital assets a little different, right? But again, I am confident, and I know that governments are trying to figure this out. And ultimately, again, yes, this is a lot of stress and a lot of uncertainty, and you just mentioned the volatility. To me, that's a feature. You should never, again, not investment advice, you should never invest more than you can afford to lose, right? You should always do your homework. You should never just listen to anyone for anything. You should be a critical thinker, hypothesis-driven, And then when your hypothesis is disproved, you move on. That's great. Isn't that science, right? That's why we got the telescope going right now. So at the end of the day, when I see 3 trillion, 1 trillion, I go back in time. And this has happened before when new asset classes are being adopted. And, to me, that makes it more exciting than if it was just steady.
My thought on it, and sometimes when I see regulation, I get a little nervous because the people that are doing it, I wonder, like, do they know what they're talking about? Are they aware? Are they curious? Or are they just, then it becomes a whole political thing and all of that, because some of the conversations that I hear, and I'm like, do you really understand? Like, right now, you can't starve the baby, right? And I understand, regulation is important, because a lot of money is being moved around and no one's tracking, and there's just so much stuff happening. But how do you do it in a responsible way? And I think that's what you said, so that we're not cutting off innovation. That was like one of the earlier conversations that was happening in the political landscape. Like, how do you ensure that we don't stop innovation here in the U.S. and it goes offshore and it goes in other places, whether it's Cayman Islands or wherever it goes, right? There's havens where people are like, or companies are just moving over there because of the uncertainty.
There are countries that just adopted Bitcoin, crypto as, the standard, right?
Well, I can tell you the way. So one, it's a strenuous process to get regulation through. You have notices of proposed rulemaking and things like that, but they do come to the participants and ask and try to have us work with them, right? Whether you're big banks or et cetera. So they're not doing it totally in a vacuum. Now, what you're expressing, and that's frustration for practitioners as well, is trying to get this iceberg to move, right? Because there are a lot of moving parts. But again, ultimately, from my nerdy mind, from reading a lot of books, progress does not stop. And at the end of the day, if a new technology or a new processor, et cetera, solves a problem, and when you're telling me you have a new asset that's being adopted by the whole world at the same time that trades 24/7 and brings liquidity to previously illiquid markets, and when you have a decentralized immutable ledger that allows for interoperability of information and et cetera, something's probably going to come from that, right? So again, it's how do we get there? Maybe a little bumpy, but kind of riding the wave and doing your homework and getting a little luck. I think some positive things can happen.
And I would add on top of that is, this is probably one of the most exciting times ever. Right? I was in, remember Web 1, Web 2, but this is different. Like, it's like everything that you want to touch, no matter what industry you're in, you're going to touch it with this new technology, with blockchain, with crypto, with the real utility of NFTs and how we're going to use that as to really manage your assets going forward. I'm like, every morning I wake up, I'm like a kid in a candy store, because I'm learning something new and I'm watching the world be reimagined in front of my eyes, and brands I'm from the marketer side, so I use the word brands. I talk more, but watching how they're beginning to become even more curious around how do they shift their businesses and change their businesses from media to automotive. You pick an industry, it's being changed. I mean, I was reading something with Volkswagen yesterday is moving everything to blockchain, their whole supply management system to blockchain. And so it's exciting and it's scary, because we were talking about jobs, and if you had a traditional job where you were doing things one way and they're like, okay, we don't need you no more, AI and this robot is going to handle that, what you're going to do, now you have to find new ways to reinvent and reimagine who you are, even as a career. So there's a lot of implications, and it's not just saying, well, this just talks about the finance industry. No, this is technical and non-technical. Everybody's getting touched, so it's important for everyone to really pay attention. You don't need to know all the fine details around Solidity and all of those other things, but you do need to begin to understand some of the fundamentals, I think, around just like a cursory thing, like how the phone works, like how my iPhone works. There's no understand how things work so you can maneuver in this space.
So can we touch on that's great insight. Can we touch on two things? So one, the two things I would say that I worry about when it comes to blockchain is, one, the environmental aspect of it. Mm-hmm. So to mint let's say it's coins, for example, it takes a lot of energy. Sometimes is, minting, with the mining coins, and it's using as much power as several nations, right? And then two, there's a lot of fraud that's involved and money laundering. And one of the roles I have at Black Enterprises, I also run IT, and I have my IT consultant always saying, don't get crypto, make sure you don't. So those two things, what can we do to help prevent that? One, the environmental side, and two, the fraud aspect of it.
I will hit a couple of those. Whew, man, you have some good questions. So when you look at like BSA AML, right? The Bank Secrecy Act, anti-money laundering, and then there are companies that work with governments and other institutions where all they do is monitor blockchains, right? And think about it. A lot of illicit activity happens with cash as well, right? I mean, so if anything, from my view, once we are in a cashless society and we're utilizing various digital assets, there'll be more transparency. There will be greater adherence to BSA AML rules just because it'll be, for example, all right, let's just say I am a bad actor and I sent, some crypto to North Korea, right? And then all of a sudden something came back to me. You think that that's anonymous. It's not, right? There's a Chainalysis or a TRM Labs or someone who's monitoring this. Now, yeah, that might have happened. Try to convert it into fiat. Try to convert it into some type of CBDC. Not going to happen, right? So I think you're going to have a lot more transparency there than you think. And I know this for a fact. It's financial crimes, when you talk about BSA, AML, sanctions, ABC, that is important stuff. So it's being addressed. And then you asked one other question.
The environmental side.
The environmental side. Again, there are various protocols proof of work was great with Satoshi, he, she, him, they, or whatever Satoshi was, to be able to solve the double spend problem, the trustless transaction and digitally, brilliant. But proof of work is kind of slow, it's expensive, kind of energy intensive, but there are other protocols. There's the XRPL, and you have the Solana's protocol and Algorand, and I'm not repping any coins or anything, but I'm just saying, like, there are other ways to find consensus, right?
Ethereum is doing something new September 19th.
Proof of stake, right? So we are moving from a protocol perspective, right? But then also, let's go to first principles here, and let's just expand our thinking. If there is value associated with mining, you are going to have participants try to figure out, how do I get the cheapest energy, which means they're going to try to figure out, how do I move away from expensive energy like fossil fuels and things like that, which in an indirect way, and this is my own hypothesis, can definitely help accelerate the adoption of renewable energy because it's a benefit. So it's something to think about as well.
Oh, definitely. And let's move to a more practical application. So in the last 5 minutes that we have before we go to Q&A, I'm just going to rattle off a couple of practical applications, and you guys just tell me what you think of any of them. So, music, royalties, tracking.
Yeah, I'm like, yes. I just think that is the future. It's fascinating when you just start looking at, I pay attention. One of the things I used to do by paying attention to culture and treating culture as data points, you're able to track when you see certain things happening. You're able to connect dots and trends that most times don't seem like they should be connected, but you can track them and understand what's happening. And so when I start seeing record companies who really care about profits start to not defend and start to move rappers and others out of the system, I always wonder how you're going to replace it. Like, what do you replace it with? Then you start getting into AI, and I had some very interesting conversation around AI tech and bots and all of that and what's happening in that world. But I think, if I was a musician, I would totally release everything on blockchain as an NFT. And it's fractional ownership, and let people buy pieces of it and own it in a certain way. You can even sell tokens before you even, mint an album or create an album or things like that. And you use that money to fund the development of your album, and then there's utility and other things that get in there.
Stuff, so
and I know. And that's what I'm scared of, because there's those checkpoints to every time, whenever you do something, there's these, I think it's 4 or 5 things, and you got to check, and they verify whether or not you're security. And we're all walking, well, not you, but people like me are walking that very fine line, hoping that when regulation comes, we're in compliance, because the rules aren't really there yet. So there is some gray area, but we're going to do it right now. You know what I'm saying?
And one of the other ones I was thinking about is voting. Do any of you have any?
Yeah, I mean, think about it. If you have, literally you could vote from home. We have cryptography. You have your biometric marker associated with your vote. It goes into this blockchain. There's no, who's here? We're counted. No, it's every single time it goes in the blockchain, it is being counted. Everyone can see, right? Maybe there's an expiration time for, after this time, there's no more. To me, and this is just, I'm a little cynical in this regard, is that our current construct within society is built on rent-seeking and friction, because that's where people can extract value, right? So having complexity to voting is a benefit to a number of participants, right? It doesn't necessarily benefit us, though. So yeah, that's a no-brainer. Eventually, I think it has to happen.
No, yeah, that makes sense to me. Like you were saying, like so much friction in there, going to a polling place or even filling out something.
Using a ballot, a pen,
exactly.
a paper. It's 2022. Like,
yes, we should be moving from that. So I think blockchain is great for that. The last thing I would ask is, so just for Black people in general, how does this help our community overall? What do you, as a 30,000 foot view, how do you see this helping the community?
High level, again, first new asset class, where the entire world is adopting it at the same time, trades 24/7, the retail average person got to kind of front run institutions. I don't even think that this is a growth rate. I think it's an adoption rate. Again, something none of us have seen. And it solves a multi-trillion-dollar problem. How do you transfer value in the digital age? I work for PayPal. Think about it. You use Venmo, it's still built on Rails from the 70s, right? We just put fancy applications on top of it and give you security. This is going to redo the entire pipes, and I actually think it's negligent for us not to learn about this. Because to your earlier point, even about jobs, yes, that job may go away, but you're going to need to be able to be comfortable with this tech. And what is the human element? I can derive a value-added insight from the output of this tech. That's my benefit now. Maybe I'm not doing this, but I think we have to do your homework, do your research. Don't just chase trends. But in my view, this is an opportunity where it's not hyperbole, but I think we're about to have probably one of, if not the greatest wealth transfer in history when this is all said and done, when we fully move to the digital economy. It's just the pie is going to expand tremendously.
And I agree, and I think it's definitely getting bigger, and I think the opportunities are just immense by, there's all new business, like for example, we talk about communities and building on what are these new communication models that we're going to need to create that people can now talk to each other as part of a community. Right now it's Discord and Telegram, but again, those are 24/7 communities. You're going to need people that know how to manage those communities. Well, that's an opportunity to reimagine call centers, right, for this new digital age, because that's the new model where brands now and companies have to now talk to their customers. A lot of the businesses that I talk to, I just DM on Twitter. And you'll end up talking to the president of a company on Twitter or, in Twitter Spaces or in Discord or Telegram or whatever. So as you start thinking, the more you understand about this industry, you'll start seeing opportunities. If you're in the film industry, right, I'm seeing amazing things happen there. If you're in media, we talk about citizen journalism. Imagine now where every community can report their own news, and then you have a system of validators, and you have reporters, and you're training them. And now you're monetizing and creating new opportunities for your community. So if I live in Harlem, but I want to keep track of something that's happening in Chicago, then I should be able to do that. Right now, if it doesn't become big news, it's lost, right? So you can now find there's so many ways through this technology to really, it's just your imagination. Like, that's the only limit. I always say the only limit for us and for this technology is our imaginations. Are we thinking big enough?
Well, thank you both, Larry Wade, Imari Oliver. Thank you for the discussion.